Someone said, well, are you afraid that these big organizations are going to buy Bitcoin and centralize it? And I said, well, it's like asking me if I'm afraid that someone in Japan is going to speak English and if that's going to undermine the English language. If Samsung is the biggest company in Korea and they start speaking English and they build support for English into their products, does that corrupt the English language? No, it actually makes English better. So I think that it's a protocol. The protocol is going to infuse everything, and we shouldn't be afraid of all the different ways that people choose to execute with Bitcoin. There's no one right answer, and the marketplace will determine the right mix of integrations of Bitcoin.
Welcome back to Library of Wealth. In a new interview, Michael Saylor gives us the latest update on Bitcoin, crypto, and MicroStrategy's investment plan for the end of 2023. Saylor began purchasing Bitcoin for MicroStrategy's balance sheet in August of 2020, fueling its stock rally alongside Bitcoin in 2020 and 2021. Taking a wider view, Saylor this week pointed out that MicroStrategy's share price is up 254% since he first began making Bitcoin purchases, well ahead of the Nasdaq's 31% advance in gains by major players like Google, Apple, and Microsoft. Recently, the MicroStrategy co-founder addresses recent discussions about Bitcoin being backed by the US dollar and said the move could raise the credibility of the US central bank if it holds BTC. Saylor also says that the approval of the spot Bitcoin ETF from the likes of BlackRock and Citadel could change the landscape around how BTC is bought by retail investors and institutions. He says big tech companies like Apple, Microsoft, and Amazon would be able to buy massive bags of Bitcoin in a minute if they wish to, considering their deep relations with banks. Let's get into the latest interview with Michael Saylor as he discusses his latest Bitcoin prediction and what we can expect in the coming months. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
So Bitcoin itself it's the pure asset, and it's the atomic level asset. So the value is it's the pure commodity within the asset without an issuer, and the most global, most timeless asset with the most optionality and the least counterparty risk. Theoretically no counterparty risk, but unless you worry about like some core dev campaigning to change the protocol, but fairly, it's the global standard for a digital commodity. What are the challenges? The challenges are you can't finance it. So if you want to buy it, you have to actually establish a new relationship with the crypto exchange. You have to put cash up front. And so that could be a scary proposition. It would take a typical investor a year to vet a new exchange partner. And then they would have to change their charter. Has different tax consequences. Sometimes they're not allowed to buy property or a commodity asset. They can only buy security. So it's a different type of asset with a different purchase channel. And then you have to come up with a custodian that you trust, or you have to come up with a custody protocol. A year ago, you might have made the argument that a technical argument, well, the futures is good enough and it trades on the CME. And it's good enough, and we like our surveillance agreement with the CME better. You could have made that argument. The difference between today and a year ago is that this year, Bitcoin is up 75%, and the futures ETFs are up 45%. So this year, what's happened is the futures have disconnected with the underlying index. So futures ETFs aren't really tracking Bitcoin right now. In fact, they're kind of destroying in the range of 10 to 20% of your capital a year. So that being the case, it's clear to any quantitative analyst or investor that futures ETFs don't provide an on-ramp for a reasonable investor without serious wealth destruction. And so I couldn't in good conscience recommend that you use a futures ETF when I know it's going to cost you 10 to 20% of your capital every year for no reason, other than the fact that the futures market isn't, the strategy of using futures isn't an effective way to track the spot Bitcoin price. It just isn't working. there you go. You've got one idea not working. You've got another idea that should work. You've got massive demand. You've got massive pressure to do it. And at some point, that pressure's got to find a release valve. Now the question is, what happens when you have a pension fund or a union or a university endowment? Well, as those things happen, you're going to have other types of custodians. And then what happens if a country wants to back its treasury or put Bitcoin into its treasury? Well, countries are not going to let the Secretary of the Treasury hold the keys on behalf of 50 million people. So I think the right way to think of it is Bitcoin is going to be a base layer, and there's going to be layer 2s like Lightning to move things fast, but there's going to be layer 3s that are custodial, like Cash App, like Coinbase, like Fidelity, like JP Morgan, like Bank of America. They're going to be custodial layer 3s, and they're going to exist either to provide functionality, like do we want 1 billion people on Apple iPhones to be able to move Bitcoin instantly from the iPhone using the Apple iOS? And the answer is probably yeah. So there are going to be technical reasons to trust a third party. There are going to be political reasons, like the mayor of New York is the mayor of New York, and we put someone in charge of New York. So when New York wants to hold Bitcoin, you're going to have New York as a custodian, New York City. So there's a political reason. Unless you get rid of New York City, and I don't think California or New York City or the United States or Iceland as a country, I don't think they're going away this decade. So I think there are going to be political distinctions that cause the need for custodians. Then I think there are also going to be other sorts of natural reasons, like I have Alzheimer's and I'm 85 years old, and who can I trust? Or I want to leave it to my unborn grandchild in a trust. Okay, how do I do that? And so I think the best way to think about Bitcoin is Bitcoin offers sovereignty and integrity and empowerment, not just to the individual, but also to the family, the clan, the village, the city, the county, the state, the country, right? Every one of those entities, they all have their own agency, and we don't want them to not have access to this.
Despite being recognized as one of the greatest stores of value, Bitcoin's widespread adoption faces challenges for institutional and retail investors due to regulatory restrictions. Michael Saylor, however, remains bullish, as major initiatives are underway that will attract significant capital, driving Bitcoin and cryptocurrency demand. Just last week, Bitcoin rose above $29,000 and briefly even surpassed $30,000. This surge was fueled by an increase in trading volume, as traders who had lost confidence in BTC in recent weeks re-entered the market. As a result, trading activity soared to a 6-week high. This renewed interest from investors could potentially impact Bitcoin's price and overall market sentiment in the coming weeks. Saylor announced that MicroStrategy has purchased Bitcoin again and aims to collect as much as possible for shareholders. Their latest purchase used $14.4 million from the company's cash flows, which is seen as another key factor that helped BTC regain its strength. What do you think about Michael Saylor's recent Bitcoin prediction? And how do you think his latest purchase will impact the crypto market and investor sentiment in the weeks to come? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.